The crypto markets are dumping ahead of this event, and $7.5 million was stolen in a suspicious hack. This is your Altcoin Buzz news. Hey, what's up, everyone? My name is Cody Buffington. Make sure to like, subscribe, and turn on notifications so you know when we drop our latest content. Follow us on Twitter at AltcoinBuzzIO, and as always, this is not financial advice, and we wish you the best of luck in your crypto ventures. Apologies in advance if it sounds like I have a little bit of a lisp today. I just got back from a minor mouth surgery, so hopefully it will go away in the next couple of days. Late last night, Bitcoin slid, triggered by concerns about crypto-friendly bank Silvergate, which shook out bullish leverage from the futures market. Exchanges liquidated longs or bullish Bitcoin futures worth over $62 million during the Asian hours, the highest amount since August, according to data from Glassnode. Liquidations happen when the market moves against a trader's bullish or bearish bet, leaving them with insufficient funds to keep their leverage trade open. The dominance of long liquidations shows the leverage was skewed on the bullish side, meaning most traders were positioned for a price rally. Bitcoin fell over 5% to $22,000, reaching its lowest since February 14th. Shares in Silvergate fell 50% on Thursday after the crypto-friendly lender said it's evaluating its ability to continue as a going concern, and delayed filing its annual report with the Securities and Exchange Commission. Bitcoin's late reaction to Silvergate news perhaps stemmed from fears that the crisis at the bank, known to facilitate fund transfers between exchanges and other market participants, may worsen the liquidity crunch in the crypto market. We also have to watch out for March 10th, where another big event that could affect not only Bitcoin but ETH will occur, which we'll get to later in this video. Layer 1 blockchain network Near Protocol has launched a product-first operating system that developers can build into and users can interact on as a single platform, which was announced at the ETH Denver Industry Conference. The platform is intended to act as a common layer for browsing and discovering Web3 products, including crypto exchanges, NFT galleries, and a social network. The framework will be compatible with all blockchains currently supporting Near Protocol and Ethereum Virtual Machine, and Near will act as the common entry point. For developers, decentralized and composable front ends offer a way for building and launching better apps and faster forking of existing pieces and components, while leveraging built-ins such as profiles, payments, and notifications, as well as searching without the need to host anything themselves. The composable decentralized front end as a framework can work with any Web 2 or Web 3 backend and any wallet. They said in the future we will be offering use of wallets from one chain to interact with another via seamless bridging. The platform is dubbed a blockchain operating system, saying we're moving away from our layer 1 focus. It's now about the user and the experience they have. We're looking at this as the front end for blockchains in general. They also added the platform is hoping to tackle some of the user experience issues in the Web3 space. As a user at the moment, it's hard to find a single place to look at Web3 apps, and there's no search mechanism or way to navigate between them. The blockchain operating system creates a single point of entry. Celsius users with funds held in its custody program have finally begun to withdraw funds, but users report delays due to backlog of requests. Some Celsius customers have reported being able to withdraw funds from the bankrupt crypto firm for the first time in 263 days after the lender froze withdrawals in the lead up to its bankruptcy filing. According to numerous social media posts as of March 2nd, certain customers who held funds in Celsius custody accounts have been overjoyed that they were finally able to withdraw their funds from the lender. Customers report they received an email a few weeks ago listing those who were eligible to remove their funds before receiving another on March 2nd, noting withdrawals could be processed. While some users received their funds within minutes, others pointed to large delays. A backlog of withdrawal attempts seems to have built up, with some claiming that the withdrawal requests are being converted into support tickets that could take some days to process as a result of too many requests and not enough staff. On January 31st, Celsius published details on who was eligible to withdraw, with customers who had only ever held funds in custody accounts able to currently withdraw 94% of their original funds. The custody accounts were only ever available to United States residents. The withdrawals are restricted to these customers, much to the disappointment of customers with funds on the other accounts offered by Celsius. A $7.5 million hack of a crypto exchange in February 2022 was uncovered earlier this week by Zach XBT on crypto Twitter. On the advice of law enforcement, Indian crypto exchange BitBNS didn't reveal a $7.5 million hack that occurred in February 2022 to its users and instead told them the attack was a system maintenance, which was said during a discussion on YouTube by BitBNS CEO Gaurav Dahake. Dahake said, "We immediately contacted law enforcement and have even managed to trace the person behind the hack." The hack was first uncovered and made public by prominent user Zach XBT on Twitter with a tweet on Wednesday asking his followers to call out the crypto exchange for hiding the incident from its users. Dahake said, "The law enforcement advised us that the users should be educated about the incident only after the investigation is completed and reaches a dead end, adding that some funds were recovered with the help of authorities and other exchanges. Dahake invited others to help with the case and said he had sort of spoke with Zach XBT in the interest of trying to weed out the bad actors. Creditors of crypto exchange Mt. Gox are about to recover some of their funds following a 10-year liquidation process, but there are concerns about a large amount of Bitcoin that will be released onto the market all at once. The rehabilitation plan gives creditors several options on how they want to be repaid and the timing of any repayment. The most important are whether they take an early lump sum or wait for more proceedings and further asset recoveries, and whether to receive the funds in fiat or crypto. The distribution of funds to creditors of the defunct crypto exchange Mt. Gox is set to kick off on March 10th, and the business's Japanese bankruptcy trust has set September 30th as the deadline for the repayments. The early lump sum option with fiat repayments suggests the exchange would have to sell Bitcoin to raise the amount of cash needed. Strategists note that there is a long-held fear that Mt. Gox redemptions would hurt Bitcoin's price. While 850,000 Bitcoin went missing from the exchange in 2014, it's not that amount that's potentially being disposed of because the exchange has recovered 142,000 Bitcoin along with 143,000 in Bitcoin Cash and 69 billion Japanese yen worth 510 million, representing about 20% of the hack. But still, there is a potential for the repayments to influence the price. That amount of Bitcoin represents about 90% of average supply active within the last day and 28% within the last week. That amount is significant because the active supply increases are normally associated with weakness in the Bitcoin price. In reality, though, much less will come into the market as many early adopters are probably still crypto believers. Recent reports say two of the largest creditors with a combined share of claims of 20% have opted for the crypto payout. Ethereum developers have pushed back the highly anticipated Shanghai hard fork by approximately 2 weeks. Initially estimated for late March, the Shanghai upgrade will now likely be deployed sometime within the first 2 weeks of April. The delay was announced at an Ethereum developer meeting on March 2nd. During the meeting, core developers came to the consensus that the hard fork would occur about a fortnight after the Gorelli testnet launch, which has been slated for March 14th. The Gorelli testnet will be the final dress rehearsal for the Shanghai hard fork before it's rolled out on the mainnet. Ethereum core developer Tim Byko said, "For mainnet, we usually want to give people at least 2 weeks after the announcement." Byko said in a Twitter thread on March 2nd that they did not agree to a mainnet date explicitly, but they will probably set a date during the next developers meeting on March 16th, assuming things go well with Gorelli. To maintain the network stability and security, ETH withdrawals will be dynamic and depending on how many validators there are exiting at any time. Validators must undergo a 2-stage process involving an exit queue and a withdrawal period, so it will happen gradually over time. There are currently 17.1 million ETH staked on the Beacon chain, representing just over 14% of the entire supply. Part of the crypto sell-off yesterday included whales who sold Ethereum in millions to crypto exchanges as Ethereum core developers set Shanghai upgrade in early April. Whale Alert reported a transfer of 15,400 ETH worth $25 million from an unknown wallet to Binance. Also, a transfer of over 25,000 ETH worth $41 million from an unknown wallet to Coinbase. Looks on Chain revealed that the whale, which transferred 15,000 ETH, made a profit of $4 million in just 2 months. So with the Mt. Gox distribution happening on March 10th and going throughout the summer, along with the last ETH Shanghai upgrade happening on March 14th, we could have an environment of sustained selling pressure throughout the next few months, which could have been part of the reason for the massive dump yesterday in anticipation of these events. But it's hard to say for sure. Let me know what you guys think down below. That's it for your Altcoin Buzz news update. I'm your host, Cody Buffington. Thanks for watching.